And she's on the recently announced Delivering Alpha Advisory Board as well. Elizabeth, great to have you back on the show. Is that right? Is that your outlook for the year? Things could get bleaker?
Well, I think it's going to be a tough remainder of the year for sure. I think there's going to be some range-bound activity in the equity markets, which leaves opportunity for relative value, but does make it hard for long-only holds there.
Yeah. So how are you approaching the market right now? Because at least up until now, this year, it's kind of been nowhere to hide. We've seen stocks falling. We've seen bonds falling. On the flip side, retirees are facing 40-year high inflation rates. So returns are probably perhaps even more in focus than ever.
Yeah, I think you're right. I also think if you're just starting to think about what to do as a pension fund now, you're in a world of trouble. You should have been thinking about what was going to happen 2 years ago, which is exactly what we did at Hawaii when we started to think about the inflationary environment. We're big battleships. You can't change on a dime. So we started moving our portfolio away from things like rates, started getting more defensive in our equity positioning, and started moving more into alternatives years ago. So we've actually done pretty well this year. We're flat on the first quarter, which I don't think a lot of pension funds can say, based on what I read in the Wall Street Journal.
Yeah, that's definitely that is outperforming from what we've heard as well. So then I guess given the fact that this metaphor of a battleship and that you positioned yourself starting 2 years ago, what does that mean for the rest of this year and the uncertainty as it unfolds? How are you thinking about potential positioning not only through the rest of the year, but for the next couple of years?
Yeah, it's a great question. And, pension funds do their asset liability studies depending on who they are once every 2 to 3 years. We're coming up on ours, so we may change our medium-term outlook later in this fall. But how we're going to go into the remainder of the year, look, we actually have a ton of liquidity. Most pension funds actually probably have more liquidity than they think. And so we want to buy the opportunities that are presented to us, and we want to be a liquidity provider when those situations arise. But in the meantime, we are looking to be a little bit more defensive. That there's nothing new I'm going to say there, right? Healthcare, defensive stocks. But also we're trying to hold on to assets with cash flow. So we added more to real estate, real assets, and we're trying to, in our fixed income portfolio, have some sort of income there too. Not rocket science, looking for some floating rates, just across the board where we can, trying to, pick up pennies.
Right. I wonder if you think there's enough runway and safety in a commodity trade of any kind, really, from here on out. Is that getting too risky for what pensions historically do?
No, I don't think it's too risky. I've never been a huge fan of a long-only commodities position. And I actually am curious when pension funds allocate to commodities, like, are they being specific about which one they choose? Because, as you know, different commodities behave very differently depending on the inflationary regime. So I think it's changed even in the last year, what you should lean into, right? I think there's an opportunity there. I would do it more on a relative value basis and a long-short basis than a long-only strategy with like a 2% hold.
What is your take on the credit market right now, or credit markets, I should say?
Yeah, you've had some interesting data come out this week that shows that there's increasing fear there, right? I think for us, we're trying to stick to higher quality. We slightly prefer mortgages over maybe, although, the Fed's about to have some action there, which may put some pressure on it. But we're going to stay tactical. We have not changed our position materially other than going to more private than publics.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.